What's up, everyone? Welcome back. A little bit of a red day recap here for me. I'm down $278, which is very, very small. We're talking like 1.5% down today based on my average position size. So it's not really that big of a deal. It's pretty much a scratch day. The problem today really was we didn't get a lot of good follow through. We had a lot of tickers just like CLEU that popped up and then they disappeared just as fast. The only ticker that probably was worth really trading today and really buying in and accumulating was GEVO. The problem I had with this ticker, we'll review it a little bit later as well, is it was just so slow. I mean, the best, front side move after a breakout would be like 6%, and that's like a perfect entry, perfect exit, which is just horrible. Usually a perfect, entry, perfect exit on a breakout move, we're talking like 20+% or something like that. So it just wasn't that exciting. Plus, all these gappers below 40%, so also not that good. And I think this makes it one of the most difficult parts about growing an account. And we're talking about once you have a strategy, once you're consistently profitable, how do you get from, let's say, making $5,000 to $10,000 a month to making $50,000 to $100,000? Well, you have to use bigger size, right? That's pretty much the only difference once you have a winning strategy. And I think the hard part about doing that is the market goes through different phases. So, January, February, March was really, really hot. You could really size up positions. You can get aggressive, buy into breakouts. And then in the summertime, it doesn't really work that well. It's a little bit more range trading, taking base hits. And even if you take base hits all day, you just can't really make that great of a day. And then today, or, just like getting back into a hotter market, you still have a lot of those kind of summer days where it's just really slow. And today was a good definition of that. And that's what, in my opinion, makes growing an account very difficult, because it's like, okay, well, let me, instead of using $10,000, let me start using $20,000. Let me start using $30,000. The problem is that could be one of those days like today where you're not getting any of those fall throughs, and then you're going to be tripping over yourself. And then all of a sudden your kind of small scratch, your 1-2% loss, it feels like a big loss, and then it psychs you out a little bit. So we're going to talk about that a little bit, how I was kind of thinking about that with these tickers we had today, and how I was able to kind of keep my losses small here. Because you gotta size up if you want to make more money. It's the most important part once you're consistently profitable. So let's talk about all these different tickers and talk about how I try to manage my sizing. Because I'm going right now from September. Let me quickly bring up my stats, and boom, there it is. For the month of September, let's just do my day trading account so we don't get additional small sizes with my swing trading, and go here. We're up 3,000 already this month. It's okay. We're getting close to a third into the month. So if I was consistent with this, we'd end the month around $9,000, and that's been a bit of my grind. Like, I'm always between like this 5, 10. I had a $14,000-$15,000 month before, but I'm not having those $50,000 days. I'm not having those $100,000 days, and that's obvious because I'm trading. My average size right now is $12,000. Last month it was around $7,000. So if I want to have those size months, I need to obviously scale up, because my best months I'm making like 100. Or my average month, I would say like 150. My best month are like 200, a little north of 200% my average position size. So if my average position size, it's let's say $12,000, I'll probably be making like $15,000 that month on a better month. So what I want to be doing is obviously sizing up. There's a lot of traders out there. They're using $500,000 per position size. I know Ross Cameron, who trades very similar to I do. He does $250,000 a lot of times per trade. So it's no surprise that he's making more money per trade. It's just obvious. I think there was a recap from Jack Kellogg recently, and he had like a $6 million in 3 months kind of session. But then I was going through his video, and it was a really good video, but one of his trades was $2 million size. So it's like, okay, well, it wasn't like 100, 200, 300, 600,000% winner. It was just he had really, really big size. And if you're using that big size, just 1% move is already, my weekly or my monthly gain. So what I want to do is really crank this up to $20,000, $30,000, $50,000 average position size. And what I'm doing for that is let's just show you guys SNGX. This was the first ticker, SNGX. What I do here, SNGX. That I kind of fumbled over because today we weren't getting a lot of action. So $10,000 is roughly my average size, $12,000. So I want to really get into that $20,000 mode. So what I'm doing right now is I'm trying to buy first around $10,000 and I want to get $20,000 and then maybe even $30,000 into a trade. Yesterday, I had 2 trades, I think, at $25,000, and that's by averaging into my winners. So what I'll do here is this first trade, my goal was to ideally average into this one, but we had a kind of a big shakeout here and I closed it. It was a little bit sloppy trading on my end. We had another breakout and then I closed it again. This is really, really sloppy trading because this ticker was under 20%. It was just, going to the upside and faking back down, and I couldn't really get on a groove with it, so I was really making a lot of mistakes here, and then eventually I took a bigger loss here on this one, but I was able to keep my losses small because I'm not just going full size right away, and that to me is really, really important. And actually, in Jack Kellogg's recent video, I thought it was really good. He talked about one thing that I've been thinking about a lot, and that is all of his biggest winners, he had the biggest size on. And on average, on average for both, on average for his losers, all his losers, he had much, much smaller size. So his average size on winners are much bigger and his average size on losers are much smaller. How does he do that? He doesn't average down into losers. So I wouldn't be accumulating here and then having to cut losses here and taking that massive loss. What I'm doing is I'm sizing into my winners, and today's not the best day to kind of show how that could have worked. Actually with GEVO maybe, but I didn't get a jump on that one. And then here, just a lot of, range trading. I'm like, okay, maybe we're going to get a pop back to the upside, never works. So a lot of scratches here in this area. But again, I didn't really get back that much money, even though I was, trying to size up. Let's keep going here, CRDF. This is another, it's kind of annoying that today's probably not the best example of this. But I thought like today was a good time to do it as well because I was able to really manage my risk pretty well. So CRDF was another ticker that didn't perform so well. So here's kind of our classic channeling here. We have a front side move, we're channeling, and I start accumulating here on the pullback. I'm along with like 16,000 size, and this one I did go a little bit more aggressive because this is a ranging pattern. This is not a front side pattern, and usually ranging patterns I'm not looking to accumulate. So this one I actually had a sell order 852 and I didn't get it and eventually get stopped out. This was kind of setting. It does run again here in this area, so this one didn't work out. I tried a little dip trade here, a little scratch, made some money back. But what I would be doing, and actually let's talk about, we'll get there in a second. We'll talk about GVO in a second. I think that's going to be the best example. So let's go to LGVN. LGVN. Let's see what this one was. I don't even remember trading this one. Yeah, it popped up really, really quickly here pre-market. So this one pops up. I try to buy here on the pullback, but look at this. I don't go full size. I don't go with $20,000, $30,000, and then have to take a quick loss, which almost wipes me out for the day based on my max stop for the day. So averaging into a winner is what you want to do, and that's why I quickly sold this one. I tried to go for another trade here. It didn't work, and I closed it right away again. So I was keeping my losses very, very small in these tickers because I'm not going in super aggressive right away. I'm getting ready to average into front side winners. That's my goal. If this ticker kept on continuing here, broke out, maybe had a nice healthy pullback, I would have bought more here, and then it would have broke out again, and then I would have kept on buying into the breakout, and so on and so forth. Especially in a hot market, that's when you're able to do these things. On a slow market, these things are a little bit tricky, and you want to kind of small size range trading. And that's why a lot of traders say, they're trading with smaller size over the summer or slower month because they can't even get to the big size because those front side moves don't even really exist. So you can't really size up like you want. So you're trading with smaller size. Let's go to GEVO. This ticker I fumbled on pretty hard. I had a few pretty bad experiences pre-market on this ticker, and I think that messed up my trading on it overall. Plus, I was really focused on other tickers today, not so much GEVO. Looking back, that was really not the day for that, or that was the bad decision. But it is what it is, and I can't go back in time. But just know I totally fumbled on GEVO, so just keep that in mind. But yeah, that was my plan. Okay, so front side move here. What do? I start buying into this one. Instantly, there was a lot of weakness. I kind of psyched myself out. I sold, which was in the end a good idea. But then, here I tried to accumulate again. Right decision, but then for some reason I sold. So this was really, really sloppy on my end. And then I'm trying to start accumulating this one, looking for that breakout, but I can't get myself to do it. And the big reason for that is because we're not on a proper front side really. This thing's really kind of trending here. There's a big resistance at 6.4. There's big support here at 6.22. So this ticker is more of a range for me. And anytime a ticker is ranging, you'll notice I'm never really accumulating. I'm just kind of scalping it a little bit. Eventually, this ticker does break to a new front side here. I buy the pullback, and man, this is really disappointing because I just sell, and I just wasn't ready to trade GEVO. So this is really depressing, I think, how I went ahead with this one. But at the same time, I like what I'm seeing with GEVO just in general because it shows the market is heating up a little bit. So we could be seeing some good continuation. Hopefully we see a few more GEVOs like this just a little bit faster because, man, this ticker was such a snoozer, even though it ended up being the best ticker on the day, and I don't really like that. But let's just kind of give an example here. So we notice we're on the front side. We do have a few little fake outs here, but overall we're holding really well. So what do? I either buy here or buy on the pullback, have my first size. Let's say I'm long 1,000 shares. And then we run up here, have a breakout. Maybe I'm buying into the breakout here, but if I don't, I would buy again somewhere in this area looking for a continuation. So I would buy again 1,000 shares, or ideally buy 2,000 here, buy 2,000 here, buy 2,000 here, because I'm thinking about what ideal size I want to get. And then by that, I'm long. Let's say if I buy again somewhere in this area, I would have maybe got shaken out in this area, so I don't really know. But let's say I buy here and I buy here, and then I get shaken out here or something like this. I don't know how I would have traded it, but let's just say I do this. So that's 2,000 shares here, so that's $12,000, and then again $12,000 here, an additional 2,000 shares. So that's 4,000 shares and $24,000, and my average would be somewhere here, and I don't know where I would have sold, but let's say I would walk away with 5% on that. So now we're talking about making $1,400 on that move. And what's good here is we are giving ourselves the potential for a big win while mitigating any sort of big losses, because we don't just randomly buy here really big size and all of a sudden get flushed out and we're like, oh my God, boom, I try to size up and instantly I lose all my money or something like that, right? If this flushed down here, it would have been okay. We would have had a starter size. We could have closed it, whatever, walked away. But what we're doing is we're getting used to having really, really big size, and it doesn't even hurt us if it does flush all the way back to break even. But if we do have that continuation, those big winners, that allows us to be really profitable. Today, again, wasn't really the best day for me to talk about the upside because I didn't really get any today. I did pretty poor trading today. Yesterday was much better, but what I did do well today was just kind of cutting my losses because everything I traded today was horrible. So CLEU, for example, absolutely just horrendous, this ticker. So let me show you guys a little bit of this one. Opens up here. At first it opens up with a little bit of strength. So this is when I jump in board, I buy the breakout here, boom, long 10,000 shares with the goal to buy more. It does spike up here. I'm getting ready to buy more, but then it flushes back down and I'm like, there's a lot of sellers here. And then I checked out CLEU, how it performed last time on my stats, and CLEU flushed big at the open, even halted to the downside. So I was like, let me manage my risk a little bit on this one, and I closed out here. I bought back on this breakout looking for continuation, but we didn't get it. And then I didn't want to trade it, obviously, or hold it into the market open, so I didn't do that. It did have a big morning panic. I tried to trade this one looking for that reversal, small size, starter size, and a lot of sell momentum when it popped up, so I closed my position. And I think I traded it one more time here when it broke this key support here at 3.635. Did a little bit of a dip trade, so made a small win on this one, but it was nothing really to walk home about. It was just, I was kind of bored today. GEVO was the one I should have been focused on, so I'm kind of kicking myself in the butt a little bit about that. But ultimately, it just wasn't one of those days where me personally, I was getting super stoked on our lead gapper, and our lead gapper is only up 35%. So that's why it's such a slow day. But if you guys are struggling growing your size, and this is something I've definitely been struggling with, this is the method that I've been using, and I've checked out tons of other videos. I follow several other traders in my specific strategy, and this is how they do it. This is the best way to accumulate and grow your size in a safe way. And obviously you want to have a hotter market for this. So this works much better once the market heats up a little bit more. And that's why it's hard to do during summer months or so on. But as the market gets better, as tickers start flying, you can really get those big sizes. And if you start accumulating to these winners, all of a sudden you might have a $50,000 size if your size has always been $10,000, and you're going to set yourself up for that really big home run. And that's really what I'm working on, and I cannot wait for spring to heat up a little bit so we can have some of those. So if you want to continue and join me on my journey, don't forget to subscribe, and if you like the content, drop a like. It's the easiest way to support the channel. I'll see you guys then first thing tomorrow morning. Like always, stay safe and make some awesome trades. Ciao, ciao, guys.